By the time Y Combinator invites a startup to pitch at Demo Day, the smartest checks have already been written. This is the Top Decile Podcast. I'm Connor Sattely with Decile Group. And today I talk to a fund who's made about 400 investments, and about half of those are in YC companies. My guest today has an awesome track record. He spent years leading AI marketplace product teams at Microsoft and globally on the AWS AI team. That meant he got to watch what made technical founders scale as opposed to creating things that nobody needs. That vantage point convinced him that deal access, not just capital, was the real edge that a seed fund could offer. Now, Team Ignite Ventures is the result. 400 plus investments across 3 funds in B2B SaaS, marketplaces, fintech, and AI, with a habit of getting into rounds before anyone else can even see the chance. So happy to welcome Brian Bell. Brian, welcome, man.
Thanks for having me. I'm glad to be here.
Yeah, dude. So when I talk to VCs, they say, oh yeah, a couple of our deals have gotten into YC, like 4 or 5 of our early stage investments have gotten into YC. Like they're super proud about this. I could imagine them listening to this right now and hearing that you've made 200 deals in YC companies and that blowing their mind. Contextualize that a bit for me. What does it mean to make 200 bets into YC companies? Is that impressive, or is it just a result of the network that you've built?
Yeah, no, I don't even think we're the highest volume YC investors out there. There are folks that do as much as we do. Currently, as we're set up, we do about 50 or 60 a year, which sounds like a lot, but you have to remember YC does 800 a year, right? 4 batches of 200. So they're the highest of volume investors out there in the industry. And about half of what we do is YC, about half is non-YC. And the very reason I have a fund in the first place is YC, right? I had when we started Team Ignite, we started with the vision of building a network that can scale startups. It's in the name, right? But we noticed a problem with running SPVs. This is, back in the heyday of 2021, as we were getting pushed out of rounds. Rounds would close really fast. The valuations would shift. So you go raise the money at a 15 cap and you go to wire the money and it's 30. Or worst of all, the founders didn't want to syndicate, right? Back then, Team Ignite Syndicate had 400 people in it. Now it has, over 10,000. And so, some founders were like, "Hey, I just don't want to send it out to hundreds of people, let alone thousands." So we had to raise a fund to counteract that, right? And that was our fund 1. Made 36 investments, kind of a fund 0, you might call it, right? Because it definitely doesn't fit our high volume thesis. So it was a little rolling fund. We did it on AngelList, which I can get into. And then fund 2, of course, we did with you guys with Decile and fund 3 as well. But yeah, our very first fund was to solve that problem and moving fast and early at YC, which is almost impossible to do with SPVs.
Do you, just an honest question, as I talk to VCs, sometimes I don't feel like they're creating a fund to solve a problem. And I love that framing you said. It's like our fund 0 or our fund 1 was there to solve that problem. Can you describe a bit about how venture capital is or a fund could be a tool to solve a problem and not like a status symbol or a industry to move into? It's like, yeah, this is what we need, so we created it. What was that moment like?
Yeah, I think it was lots of little moments, right? Raising 100, 200K in my syndicate and going to wire the money and the round's closed. That's pretty painful.
Heartbreaking.
Or raising 100, 200K and they're like, "Hey, I know I told you 12 cap or 15 cap, but we're oversubscribed. We'll still let your money in, but we'll let it in at a 30 cap." And then I'm kind of scratching my head going, well, if I had a fund, I'd have a 2x markup, right? Or worst of all, that third situation where they don't even want to syndicate. And YC actually advises their founders not to run SPVs before demo day, right? But the catch-22 is that all the best rounds are closed before demo day. Not necessarily the best companies, right? Because there's been plenty of companies I've invested in after demo day where they're non-consensus bets. And so you have to balance the consensus bets that are closed, weeks ahead of demo day with the non-consensus bets that are still open after demo day. And sometimes what everybody thinks is hot is not the best long-term investment as well. So you have to kind of balance those.
So, kind of a counterintuitive statement. The best rounds are closed by demo day. I think there might be a misconception that demo day is where you get to learn about the rounds. You're saying, hang on, if you're learning about the rounds at demo day, you haven't just lost the race, like you showed up to the race on the wrong day.
Basically, yeah, that was a big surprise for me because I'm an outsider, right? I spent years in finance and Wall Street and real estate, and then years as in various startups running demand gen teams and product teams. And, like I ran AI at AWS, and I ran a big team at Azure that scaled startups called the category team, where we kind of looked at all the different categories. We developed playbooks to scale startups. We closed $150 million deals on Azure with big customers, big private, I won't name their names, but big customers. And so when I came into VC, I came in as sort of an outsider. 20 years into my career, I was roughly 40 years old, and I'd been angel investing on the side and LP in a few funds myself. And so I was like, yeah, I'll just go to demo day. That sounds good. It's a good way to bootstrap your deal flow, right? When you're getting started. And I was really shocked. I showed up at demo day. I'd made a few angel investments, so I was able to get in the door. YC kind of keeps track of who's on cap tables, and that's how you get kind of into YC. So I was able to say, hey, here are all my angel investments in YC companies. Able to get through demo day, and it's just round after round was closed. Reaching out, and back then it was 400 companies twice a year. So reaching out, round after round was closed. I'm like, oh, I'm gonna have to go earlier, and then after a few more demo days of realizing, I kind of have to have a fund here to move quickly. And so, yeah, I never set out to start a fund. I was perfectly happy running SPVs. I had a nice career at Microsoft, making good money, all that. And the fund was a necessity in this case.
So I want to ask how, of course, you get early access into YC, but now I know we're going into blurry proprietary strategy standpoint. So let me start by asking this. Is it possible now for a new VC or somebody who's not connected to YC to kind of become part of the in crowd that writes those early checks? Is there a door still open somewhere?
I think so. Like, especially if you're a former founder or went through YC, right? That's probably the best way, going right through the front door. But yeah, you can, I get this question all the time from LPs. Hey, can you get me into demo day? I'm like, okay, here's what you're going to have to do to get into demo day. And it's hard. It's hard to get into demo day. There is limited attendance there, but yeah, it's a very welcoming community, very supportive of VCs and founders, obviously. So I think it's still possible.
What would you recommend to do it? Start writing checks, trying to get into YC deals when you can. Would you recommend that VCs try and write checks into YC companies that are already pitching at demo day or even later? Or should they try to profile the deals that they think might get into YC and try and be in before they get accepted? What do you think is a better strategy to get on cap tables?
I think the best strategy is to invest in things you believe in, right? So founders building the right thing at the right time, whether or not they're YC, right? Yeah. If they happen to be YC, great. And there's lots of great companies there. Like I said, we invest in 60, 70 companies a year out of YC. So we think we're huge fans of the program. But at some point, you're going to have to develop your own proprietary deal flow as well.
So let's talk about that, because half of your investments aren't in YC, and we've already done you a disservice by focusing the full 8 minutes of the first part of the podcast on YC. So how does that fit in your portfolio, balancing what comes out of YC, what doesn't come out of YC? Are there certain signals you get from YC founders that you don't from the other, or vice versa? I guess your founding principle is invest in what makes sense, right? But how does those investments differ amongst those two crowds in your portfolio?
Yeah, I mean, YC rounds are usually oversubscribed. They're very competitive. They're very highly valued. I'd say the average cap out of the most recent batch was probably 30 million. And these are companies that have hundreds of thousands of revenue, right? So outside of YC, you can invest in companies with hundreds of thousands of revenue at typically like 10 caps, call it, maybe 15, depending on the demand. So it's a supply and demand thing. They've really funneled the process. They only take something like 1.5% of their applicants. So every team you meet is pretty incredible, right? Oh, we work together at, name your favorite tech company, OpenAI, Google, whatever. And we're solving a problem that we saw while working together in the past, right? And so they're just great teams. And now you're trying to assess, is it the right team with the right product at the right time? And that's the difficult part of investing.
We're recording this podcast in the heat days of summer 2026 when Team Ignite has just launched their new web presence. And it was something that I always love about what you do is how openly you share data on your portfolio and your processes openly. So can you talk a bit about why that's a core fundamental of what Team Ignite does and share a little bit about the new relaunch that just happened?
Yeah, and it was actually Deo, the founder of Decile, called my brand ghetto, and it really affected me. I was like, "You're right. I haven't spent a lot of time on the brand of Team Ignite. I was too focused on building the network and making the right investments, right?" And so the summer came. I just closed Fund 3 in June, and July is just a really slow month in venture. And so I thought, I'm going to spend some time really improving the brand, right? We have the brand assets. We have a nice logo. We have nice, fonts and colors and everything. Now it's just time to spend a little time polishing that website so that when an LP lands there or a founder lands there, it screams quality, or at least doesn't scream like not quality. And so that was just a lot of vibe coding, man. Just a lot of vibe coding. I'm technical. I was a product manager for a really long time. And so I kind of have a good taste for what looks good. And I just spent a lot of time on it. And frankly, I saved a lot of money. I mean, I probably spent 40, 50 hours on the website vibe coding, which I could have probably paid somebody, tens of thousands of dollars to do on my behalf. But I enjoy building, and I don't always get to do that anymore. And I built a lot of modules on the website that, people charge $1,000 a month for, right? We created our own jobs board, right? Where we scrape the nearly 400 companies every night. We figure out what jobs they have and we put them on our own job board, right? There's platforms that do that cost, 15, 20 grand a year, or you can just vibe code it yourself. So I just vibe coded it myself. And I think it kind of now tells a story. The website shows founders what we can offer. It shows LPs what we can offer. It exemplifies some of the high quality executives we have on Team Ignite. Team Ignite is predicated on, Team Ignite. Venture capital is a team sport. That's the headline, right? And I see myself as sort of the orchestrator of a network that gets a lot of great deal flow, invests in a lot of great companies, and tries to help them, right? And how do they need help? Well, usually it's like fundraising, so we're pretty good at that. Customer intros, so we have a huge bench of executives that our founders can go talk to about getting intros, into their organizations. But also talent intros. And now that's why we did the job board. Where are our portfolio companies hiring?
Awesome. Yeah. Dude, I think anybody that's listening to this needs to go to teamignite.vc and check out the resources. Power Law Simulator, 5 flywheels, Team Ignite GBT to get a first scan of your deal before it sees your desk is like you can have an AI that's been trained on what you guys are looking for to get.
We have over 100 partners and discounts on there, perks that we've put together from the network. So now, we're starting to kind of set ourselves up here. It's like, okay, we're kind of telling the story of what Team Ignite is. And before, the website was just doing a really crappy job of telling the story of the power of our network.
How close do we get to platform here in what you're building?
Yeah, I mean, I'm always thinking about how do I scale everything? I am a solo GP, right? I have some part-time partners. But the way I've built Team Ignite, you can think of AI, like we're just an AI-powered operational platform, right? For early stage venture. So everything and it's kind of like, I think, if I think about it, when I started, I was at Microsoft where 95% of commercial revenue at Microsoft comes through its partner ecosystem. And so in a way, I think I was kind of borrowing or rhyming with Microsoft there in that, I want to build a platform and a network where 99% of the value comes from the network, not from me, right? Because if it's just me, then it doesn't live on beyond me, right? And it's not this thing that scales. It has to scale without me. So everything I do is an AI-driven process. I call it like the McDonaldization of venture, where and I worked at McDonald's when I was 16, so I'm very familiar with this. But everything is a process. It's repeatable. It's scalable. It's software, it's AI, right? So we've been collecting, its core, it's like one of the 5 flywheels is our AI and data systems. We've been collecting data on tens of thousands of companies that we've evaluated over the last 6-7 years and companies we missed, right? And so we're able to train the AI and making predictions. frankly, it does probably a better job than me now. It educates me more than I educate the AI because I've tuned it hundreds of times on past successes and failures.
Sure. And it's not going to be in a bad mood on a Tuesday or forget it's coffee on a Thursday or somebody got in an argument on the bus with you and then suddenly it's going to grade a founder lower and you see, oh, I would have dismissed this. What are you talking about? You look into it, see your own methodology and go, yeah, okay, fair, right?
Yeah, and what's exciting about those 5 flywheels, which I wanted to put on the website, and there's a better version that I have the offline in our data room, but it starts with the AI and data tools. Then it's the founder community itself, right? There's almost 400 startups now that you can collaborate with and get peer help and referrals and customer intros and playbooks. That some of these founders have co-developed some of the playbooks internally for how to do GTM, how to do fundraising, how to do customer validation, how to build a data room. So all that's there, how to fundraise. And there's a WhatsApp community where they're all talking to each other and helping each other, which is just awesome to see. We have our VC community, over 3,000 VCs in the network now that co-invest with us, follow on with us. Obviously we get a lot of deal flow. We share deal flow. The Team Ignite community now is over 16,000 people. That doesn't count, our social media. That's just like people in our database that have joined us and want to help startups, invest in them, advise them, counsel them. We have over 100 partners and perks that I mentioned on the website. And then we have Ignite Media, right? The podcast, social media, blog. We have tens of thousands of followers. We're getting probably 1 million views and impressions every month. So we're really kind of starting to build that network kind of compounds geometrically over time.
I love that, man. And from one podcast host to the other, I'll say you give me something to shoot for here with the Top Decile Podcast. And look, I worked at Dairy Queen when I was 16, so now we have 2 things in common. I feel like our trajectories might be similar, I hope.
Yeah. Yeah, totally.
So I want to jump in on LPs. Walk me through the pitch you make to LPs. And the reason I ask it like this is because sometimes with first-time VCs, we work with them to explain, look, I can get you access into top deals via the fund. And your fund is all about access. So is that what's at the core of your pitch to LPs across your first 3 funds?
Yeah, I mean, it kind of depends on the LP and what they're looking for. Some LPs want to just do SPVs. They want to do one-off deals. Some are happy to write a big check into a fund and walk away. Every LP has, some LPs just want returns. Some want a concentrated strategy, which we do not offer. Some like the diversified strategy. We think we have a tool on our website that's a Monte Carlo tool that we didn't mention that basically takes probability distributions and you can run thousands of simulations on portfolio assumptions and see how different assumptions affect your expected return, your standard deviation. This is the kind of stuff I did on Wall Street, which makes me kind of a unique VC, I think, because I approach everything from first principles of math. Nobody taught me VC. I'm sort of self-taught. Decile a little bit. You guys taught me a little bit, but I've learned a lot from interviewing over 100 VCs on my podcast as well. And, I've also interviewed a lot of LPs and what they look for. How do they evaluate fund managers? In fact, I've interviewed probably 30 or 40 on my podcast at this point, enough where I realized that there was this huge gap in the market. And so I literally just wrote a book called LP, The Insider's Guide to Investing in Venture Capital. So this is the first time I'm sort of telling anybody about it. So by the time this podcast comes out, you'll be able to pre-order the book. It's coming out in September. And it's basically, it draws on these dozens of conversations and hundreds of conversations really with VCs and founders on how to invest in venture capital. There's been books written on how to be an angel. Jason Calacanis wrote a really good book there. Scott Kupor, The Secrets of Sand Hill Road, wrote a really good book on the legalities of venture, the mechanics. But nobody's really written the book from the LP perspective. And as an LP myself in 5 funds and, interviewed dozens, I've seen a lot of GPs too, right? 3,000 in our database. So I've just seen a lot. And so I wrote that book.
Give us a few highlights because every VC, I think, or every GP knows the basic motivations of LPs and what they're in it for. Some fun, right? Some access, some profit. But what are some of the aspects that a beginning GP might not understand about the mindset that LPs are bringing to the table?
Well, I think you have to, the book starts with assuming you have basically no knowledge, right? It's like, what's a venture fund? How does that work? What's a limited partnership? What are all the mechanics? What's the timeline? What's the return profile? How do you think about sector stages and geo? How do you think about the GP market fit? It goes through chapter by chapter, and it's not a long book. It's roughly 200 pages. So I probably will expand it in the future, but it kind of takes you through step by step how to think about evaluating deal flow, evaluating value add, evaluating track record. What are the metrics that matter? Just takes that chapter by chapter.
Love it. I'll get a pre-order in there for sure. And thanks for breaking the news on my podcast.
Yeah,
Although by the time it publishes, I know you will have broken the news on yours.
Right.
So
yeah, I've teased it a couple places on the pod and the blog and stuff, but we haven't started marketing the book yet. So
last question, I have to, in Team Ignite fashion, focus on the founders. Let's talk about deals, man. You've made 400. Do they blur together after 400? Are you at such a quantity now where do they still mean the same at 400 as they did at 4?
Yeah, every founder is a special snowflake, and with a unique crystalline structure, and you're trying to evaluate the unique crystalline uniqueness of those startups. We have a portfolio manager. She's been with me 5 years. She uses AI to crunch all their updates. We have various AI systems and operational tools to keep tabs on our startups, the health, where they need help, how we can help. And I don't read the updates anymore. There's hundreds of them coming in every month. I just don't have the time. So I read summaries of the updates, understand what like how they need help, who can help them on Team Ignite. And then, like I said, we have all these tools. A lot of them are portfolio companies, right? At this point, that's what's really beautiful about Team Ignite is I can actually point portfolio companies and partners at the founders and say, oh, there's another startup in the portfolio that can help you with fundraising. That's Metal, right? Who you've probably heard of. You need to get intros? Go use Happenstance or Bordy, both portfolio companies of Team Ignite, right? Go use these tools. And we have special discounts and offers inside. And that's the hard story to kind of tell LPs is like, well, how do you manage 400 companies? Well, I don't. I've set up a system to manage that. I don't everything just runs. I could just walk away and just check in an hour a week and Team Ignite would just run.
You become sort of a automated air traffic control, to borrow a term from Jonathan Bragdon. It's pointing the things in the right direction, but also creating the system where you don't need to be pointing every single day. I
still need to meet with LPs and founders, right? Because somebody needs to do that. And I don't have a principal person yet that can go, I have some part-time folks, but I don't have anybody full-time that I can stand up in front of a founder because founders are pretty demanding and so are LPs. So I have to take some of those calls. But as soon as I have a principal level person that can do the LP facing thing and the founder facing thing, I literally, I'm just taking second meetings and reviewing reports. I'm very much an executive in a briefing center.
Love it, man. Last question for you. You're only the second 3-time fund founder that I've had on the podcast. And so I have to ask if you can bring yourself back to that fund 0, as you called it earlier, or fund 1. Any advice you wish somebody had given you back then that you might be able to pass on to the next generation of VCs who are just getting started with their fund 1, kind of in the jungle at the moment?
I think you have to have a thesis market GP fit, right? One hard thing about the path I took was my fundraising was not tied to my thesis, right? And so there's a disconnect there. Because we're such a network-powered system with thousands of constituents, sometimes that's hard to break through the noise and the clutter and kind of grab onto somebody with something that's really special, right? Like you have Ihar in the portfolio at Decile. He's an immigrant engineer. He raises from immigrant engineers to back immigrant founders. That's a really great example of thesis market GP fit. So really think about what's special about you. Now, Team Ignite's really a reflection of my past and who I am, how I think about systems, how I think about networks, and sort of my ADHD, I think a little bit too, and how I think about operations and games like Civilization and stuff like that. I just like that kind of stuff. And it's very much a reflection of me. It's not the right path. Don't try to set out and build a Team Ignite just because you think it's a good idea. Try to think about what's special about you as a person, and then tie that to your thesis.
I love it. I think the best advice always has to be one half practical and one half philosophical. If you're not assessing yourself and reflecting on your lived experience and how it applies to the job in front of you, you're missing half the question, right? So, Brian, thanks a lot. Really means a lot that you came to share your story with me and with others. So really appreciate you taking the time.
Yeah, thanks, Connor. Appreciate it.
All right. Thanks a lot, Brian. Bye-bye.